Just after 10 a.m. here in Perth, just after 1 p.m. on the East Coast. We've got people in New Zealand. We've also got people joining us from the US, a couple of states in the US. So welcome everyone to Pointerra Limited's market update. The person talking is Ian Olsen, the Managing Director and one of the founders. And it's my pleasure to speak to you guys today in what is quite the most extraordinary of circumstances and times. We obviously put out an announcement on earlier in the week on how we thought COVID was impacting our business now and what the outlook was. So I'd like to address some of that. I'll also go back to our most recent enterprise sales update from the back end of January and provide some colour around developments on some of the items that were featured in that update. And of course, some of you have been kind enough to provide some questions. So I will do my best to answer the ones I'm allowed to from the context in the context of continuous disclosure obligations from the ASX. But first of all, I hope this finds everyone personally, family, friends, and colleagues safe and well. These are extraordinary times, and that we find ourselves in, and to some extent, the team at Pointerra feel a little bit weird about these times because we are a virtual organisation. Since we started hiring people in sales roles and in technical roles in different parts of the country and the world, and we've been operating using tools like this Zoom package for the best part of 2 or 3 years. So what a lot of the world is starting to get used to with having dislocated workforce, it has been the norm for us. So certainly the back end of last week and into this week has seen a real acceleration in interest in the platform from existing prospects, existing customers, and people that have approached us as recently as the last couple of days, wanting to know how they can onboard, because they find themselves in a situation where they're managing, in many cases, critical infrastructure assets. They've got enormous digital libraries of data, but that data is pretty much stuck in enterprise servers, and people are trying to understand how they can get their workforce to be able to work from home or in a dislocated environment and still be able to remotely inspect, remotely manage, and query what are in many cases also geographically dispersed assets. So we've seen increased interest from the capture community, so the surveyors and the other folk who drive cars and fly planes and drones to capture 3D data. We've seen increased interest from the engineering and construction and maintenance community, the people that build and maintain and operate assets for owners, and indeed from the asset owners themselves, and in the US in particular, some of the very large utilities that are either existing paying customers or prospects. So I'll walk back with that, I guess, with that overview to the sales update from the back end of January, and because I have had quite a few people ask me about how the recent global events have impacted the onboarding of some of those customers. So you'll recall we talked about the Precision Hawk Florida Power and Light multi-year pole inspection program. So we've been working with Precision Hawk for over a year now, and as some of you will be aware, late last year we actually hired two key staff out of Precision Hawk who joined our team, Jamie and Jill, who are both based in Denver in Colorado, and they joined us at a time when Precision Hawk was undergoing some issues itself in relation to its growth and its funding, and obviously we were able to take advantage of that situation, that uncertainty. The Precision Hawk got recapitalised. They got their next pole inspection program order from their customer FPL, and that exercise started in the end of January. We finished our piece last weekend, as we said in the announcement on Monday, and I believe that Precision Hawk is pretty much done with that piece by the middle of next week, and I think their deadline was actually 31 March. So at the moment, we being Precision Hawk and Pointerra expect that FPL will issue another work order. And I guess an overview here on why FPL is undertaking this multi-year pole inspection program, just to give you a bit of colour. Obviously, Florida is a place that every storm season experiences significant interruptions from mild storms through to tornadoes that can completely wipe out entire communities. So they're very innovative. They spend a huge amount of money on sustaining capex and maintenance, and are clearly the most innovative utility in the world, principally by virtue of where they are geographically located. They've got about a $300 million US budget that has been allocated and needs to be spent over the next little while to improve and fix and engineer and maintain poles that are in poor condition. Now, they obviously have millions of poles in their network, so they've spent the last year or so trying to find the most cost-effective way of determining the condition of each pole, so they can figure out what needs doing to it and actually get boots on the ground and go and spend money. So the old way was a camera-based, GPS camera-based system where you'd walk up to a pole and take a bunch of photos, and those photos would end up on someone's desktop, and a bunch of remote analysis was done. And James Young, who joined us late last year, he helped Precision Hawk come up with an innovative program to use drones to inspect the poles, and come up with a hybrid approach to inspect using drones and get better information faster and at a more cost-effective rate per pole to the customer. We were approached in the middle of last year to see if we could deploy our analytics, not just our platform, but our analytics capability to do some of the interpretation of the 3D data and turn that into information for FPL. So you roll forward now, where Precision Hawk and FPL have many hundreds of thousands more poles to inspect. The pole programs at the moment have been 20,000. Have been on a 20,000 pole basis. The packages they've been. We've just completed the second one. The first one was in the last quarter of calendar 2019, and it's our expectation that FPL will start to overlap the award of those programs. So we would expect to move from one per quarter to probably 3 every 6 months to 4 every 6 months. So what that means for Pointerra is that Precision Hawk should remain a data as a service and an analytics as a service customer, and our job, our business model, our whole reason for being is to help people reduce the cost of interpreting data and to enable them to better manage the underlying assets. So we're also we've got a third element to our income stream, which is DPAS, data processing as a service, and we're working with FPL and Precision Hawk to take on more of that capability and responsibility to help Precision Hawk increase their profitability, reducing their cost of capture and cost of analysis, and indeed providing better and more timely information to FPL. So, we said in that release at the end of January that there were at least 50 of those task orders. Those task orders are circa $1 million US each, and that's to the capture company. So that's to Precision Hawk. And we do okay out of that, and you'll start to see that come through in this quarter and in incoming quarters in terms of revenue as well as cash receipts. So that's one I guess one key. It's probably the key operational plank of our business at the moment in North America. But because of how innovative FPL are, and they're very happy for us to use them as a reference point in the utility community in the US, overlaid with what's happened in the world in the last 4 to 6 weeks, some of the other larger utilities have accelerated very much their interest in in going from a trial customer where they're not paying us any money and they're humming and ahhing and taking their good old time, into wanting to run very quick, clearly defined paid proof of concepts so that they can roll into an enterprise deployment. And some of those were what we announced earlier in the week. The statewide capture and emergency response program, that's a longer burn for us. We've got two roles there. One is to do the data processing for the actual statewide capture, and we were advised a couple of weeks ago that we were put on the shortlist for that, with a couple of other people who are also doing who'd also included our platform as part of their pitch. So we're pretty confident that we'll get that work once the state is flowing, and then we will then be rolling into an analytics support role for FPL's storm and emergency response program, whereby the drone they'll have in the big unmanned plane or drone that they'll have in the sky will land, will follow the storm, capture the state of the network. The plane will land, the data will get up on our platform, and within we've got some service level agreements we're working through with FPL where we will deliver them information on pole dislocation, tree movements, property movements, etc., within a predetermined time, so that they can task the crews to go and fix the elements of the network that need repairing. And to give you a feel for how much they spend either preparing for a storm event or indeed dealing with a storm event, last year I think it was Dorian, which was going to hit pretty hard the Florida Panhandle, but ended up skirting off to sea and smashing up some of those island nations. They spent $300 million staging the recovery crews from within Florida and neighbouring states. So that was the amount of money they had to spend in getting people ready to fix what ultimately didn't need fixing. So the scale of the investment in sustaining capex and maintenance for that utility alone is immense. And what we're seeing is that we're becoming very central to getting them timely and accurate information from this from the 3D data that they're capturing from various sources. So MLB was that was a great call to get late in calendar 19, where they called us up and said, hey, we've got a laser scanning company that scans all our stadiums, and I think baseball is if not the most, it would be nearly the most statistically oriented professional sport in the world. Each stadium of the 31 stadiums is scanned more than once or twice throughout the season, and so we've been working with MLB. We've got it's fair to say the COVID situation has delayed to the start of the season. That has slowed down MLB's ability to onboard. We've got a call with them next week. They've reiterated the fact that they're coming on board and they're going to be a paying customer. So we'll see where that leads, and that's pretty much all I can say on MLB. And then the statewide large scale deployment, again, that's one of the mapping partners out there that is in the US that's responsible for capturing an entire state. It happens to be the state of Florida, and they're working with the various counties in the state to onboard each county with its respective data parcel and become a customer. And I think we identified there that would be a circa 600,000 US per annum ACV when complete. So that's in progress, and it's not something that'll happen in a big hurry, but it will happen. The other item on the enterprise sales update was 5G network deployment Australia and the US. So we're working with Lendlease in Australia, and hoping to work with Lendlease's other business units in the US to deploy our solution or to deploy our platform as part of their 5G antenna deployment solution they're offering to the telcos and the utilities. So the situation with 5G, they're low-powered line of sight repeaters, and they're very different to traditional 3G and 4G antennas. So they a lot of them will end up being hung from power poles, and there are a number of engineering and permitting challenges that need to be overcome before a utility will allow a telco to bolt some 5G antennas onto a pole. Lendlease have developed a solution, a technology solution and a process solution that we're part of, and that's going ahead as we speak. So I think the other item I talked about there was the expansion of the US team. And there are some questions that people asked about the US team that I'll come back to a bit later. I've got Paul Hart on the line as well, down in Melbourne. Paul from Canary Capital is as part of a boutique group of half a dozen people that have been supporting our business in the capital markets since 2017, and they've been great partners throughout that journey. And I've got Paul on here to allow me to take a breather from time to time and ask me some questions that I might have forgot about. So why don't you jump in for a tick, Paul, and I'll take a breath.
Yeah, look, we've had hi Ian. We've had a number of questions about the option package that's been put forward for directors. So is it possible for you to give the callers an update on where that's at and how soon you intend to proceed?
Yeah, sure. They're shares. It's a loan funded share scheme, but for all intents and purposes, they are options. Obviously the allocations to the directors were approved at the AGM, and we've got some new staff that we're going to include in the plan as well. We'll be making offers for them to apply for shares under the plan. The plan had a formula, a VWAP formula, as required by the ASX around the price at which the shares are going to be issued. And obviously, I have had more than one person ask me if we're purposely waiting for the share price to be weak. And this was prior to COVID, so that the price we were paying per share was lower. So that's not the case. The nature of the offer to the individuals, particularly in the US, has meant that they've got to go and get individual tax advice, and that slowed the process down a bit. The commitment we gave to shareholders at the AGM was that we would set the price at a 20% premium to the VWAP calc, and since the events of the last few weeks, we've actually revisited that and formed a view that what we thought was fair and equitable, particularly in light of the fact that we raised some money late last year at 5 cents, was that if we priced that offer to the directors and staff at a 20% premium to that 5 cent price, so that'll be 6 cents. So that's what will come out in due course, Paul, on that matter. So I hope that I guess that regardless of what the share price is today, you've got a group of directors and key staff who are happy to invest in the company at 6 cents a share through that plan. So I'll jump forward to the announcement that we put out on Monday about COVID-19 and operations, and I started the call by explaining how we are a virtual organisation. I'm actually in day 11, 10 or 11. I've lost count now of my own quarantine. I was in the US just as this all went pear-shaped in terms of travel restrictions and quarantines, and managed to and woke up one Saturday in California, ready to head to Denver, to Florida, up to New York, with Randy and Jamie visiting customers and prospects. And Mr. Morrison said that anyone who came home would have to quarantine for 14 days. So with the domestic travel situation deteriorating in the US, we made a call that I needed to get home, because we weren't sure if we'd get stuck in a certain part of North America ourselves and not be able to move. So yeah, I'm in a quarantine myself, a few days to go. But it's fair to say that because of those points I made earlier, at the start of the call, and that is that we are an organisation that operates in the cloud. We, whilst there's a few of us that sit together in an office in Perth, albeit not at the minute, we're very used to operating this manner. We do a lot of our sales calls, a lot of our early sales calls, and serve our customers using tools like Zoom. And obviously at the moment it's a bit hard to visit them physically from a sales perspective, but from a support perspective, 99% of what we do is through these sorts of means. So really not a big impact on the way we operate the business. In terms of the ability to get to customers, we've found that with people being locked in and working from home, that people tend to be more available than they were in an office environment when they're often not at their desk or in meetings. So I think I said at the start of the call that there'd been a rapid increase in inquiry, and we've seen that in the US and in Australia. We signed up a couple of government agencies on the East Coast earlier in this month before COVID became a thing, and we've got other government agencies and surveyors and engineers coming on in Australia and the US as we speak. So we have added to the customer base. Existing customers are spending more. And I think I identified that cash receipts from customers will more than double the previous quarter's total. We're 3 or 4 business days out till quarter end, and because we report quarterly, and because a large part of this audience is tremendously interested in cash each quarter, we do spend a huge amount of time running around in the last week or 2 of the quarter, trying to encourage people to help us meet our quarterly reporting requirements. So the cadence on that is very quick. The 90 days comes around very, very fast. We understand that some of the retail shareholders would like to speak to us every day if they could, and understand exactly what's going on in the business. And so working within the ASX continuous disclosure guidelines, we're not allowed to market the business, but so we try and provide these enterprise sales updates as regularly as we can. Obviously, if there are material sales agreements or contracts that we strike, we will announce them separately. You saw we had to put out a clarification on Monday because I made the mistake of identifying 3 paid proof of concepts in the announcement without qualifying that they weren't material. So you can see even in this time, the ASX is still very much on top of making sure that we adhere to their particular reporting requirements. I don't really have anything else to say about that announcement from Monday. There was a paragraph near the end on the outlook, and I know someone asked, one of the participants in this meeting had registered and asked me a question about our cash position, our expected cash receipts, including our R&D claim that usually comes in August. We're pretty comfortable with where we are. We're pretty comfortable that we've got some strong cash flows coming in the next few quarters. If we need to, without hesitating, staff and board would take a salary haircut if that was needed to preserve the capital or the cash position of the business and make us not have to come back to the market to raise money in these times, which are where the valuations clearly aren't great. So so obviously the board and the management team are very conscious of not running out of cash and making sure, indeed, we've reported an ACV. So it's probably a good time. Oh, hang on, just bear with me. Sorry guys, I've just lost my earpods. Bear with me for a minute. Okay, looks like they're dead. All right, I'll have to switch to another audio device. Bear with me, please, guys.
I think we can hear you, Ian.
Perfect. That must have just gone to my laptop. Okay.
It has.
So I will jump to those questions right now. Right. Well, there were a couple of different things. One of them was, can you explain the difference between and one person described it as the absolute and complete disconnect between stated ACV and cash flow. Are customers not paying in advance? ? Are there free trials? ? Is ACV extremely forward-looking? So there's no free trials for obvious reasons included in ACV. ACV stands for annual contract value. There is a disconnect from a timing perspective with some of the larger organisations, and the larger the organisation, the longer procurement takes from the point where they commit to paying us to the point where they actually start paying us, and indeed beyond. So you've got a number of from an ACV perspective. I'm sorry if there's background noise. There's a crane outside my window. From an ACV perspective, there's a point where we have a contractual relationship with the customer where they're due to start paying us, or they commit to start paying us. I'm sorry. We then have to onboard them, and from a revenue recognition perspective, we're not able to start recognising revenue until such time as people are using the platform. And then obviously they pay us when they pay us, and some pay us monthly and some pay us in advance. So there are, and there's no theme for each. Some people start paying straight away. Some take a couple of weeks or indeed a few months through procurement. And so what you'll see, and we've mentioned this before in the sales updates where we've put the ACV numbers out quarterly, you will see I would expect, and it would be reasonable to expect that ACV revenue and cash receipts do start to trend together over time. But obviously, as we've just started reporting this ACV number from the March quarter or the January quarter last calendar year, there have been those disconnects. But certainly, so yes, it is forward looking, but it does represent commitments customers have made to start paying us money. But there's no prospects, if you will, in that ACV number. So I had a shareholder ask me about data processing as a service income. So yes, that is the work we're doing for FPL. But since Jamie and Jill came on board with that dual role of having a sales and BD role, but also being with Jamie in particular, one of the more experienced LiDAR processing professionals in the world, not just the US, he has attracted a bunch of other customers to that particular service that he can do. And the reason we made the call to bring on Jamie and Jill was twofold. Firstly, to help us with FPL. Secondly, to help us. So for a customer, for a surveyor that uses us or an engineering firm that uses us, to get value from Pointerra, other than just having their data in one place, it's about changing their workflow. And with Jamie on board and his pedigree and his standing in the 3D community, we believe that having him on board as someone who could consult to and also do processing for these businesses and help them understand how dramatically they could change their workflow, that would help us shorten the time frame it was taking to attract new customers. And they've been with us since the back end of October, and that's certainly been the case to date, which is really pleasing.
Ian,
yes.
Ian, could you just a question which might benefit the listeners? Is the software, is 3DP Pointerra platform easy to onboard customers remotely, especially given the distancing?
Yeah. So I guess one of the features of our platform, as with most cloud platforms, whether it's Zoom or Dropbox or Xero, the accounting packages, because they're in a web browser, they're really easy to use. So there's not a lot of training. They're very intuitive, and ours is no different. In terms of onboarding, it's simply a matter of figuring out the best way to get their data into the platform. And yeah, the short answer to that is that's very easy to do. And we're doing some migrations right now with some customers in the US and in Australia. So the fact that people are dislocated from their traditional place of work really does not impact on our ability to onboard a customer. So I think I had another shareholder ask how the current environment has affected sales to date. So I think we've seen an acceleration of interest. I'd like to think that will transform into an acceleration in customers coming on board and paying us money. And obviously these are very dynamic and unprecedented times. So we'll do our best to working within the ASX continuous disclosure guidelines to keep you guys informed of the news, good and bad. I had another question. Does Pointerra have many small clients, turnover of less than 10 mil? Yeah, we do. The surveyors and the engineering firms are, a lot of them are very small businesses. Some are as small as 10 or 12 employees. They're the people that pay us 250, 500,000 US a month. We haven't had any churn since COVID became a thing. I think in the, when did we start? We started getting customers on the platform in February, March of 18, so just on 2 years. I think we've had a couple of small businesses decided that they didn't see value in our platform, but to date, our solution for the people that have started paying us and continue to pay us has been very sticky, and we've been able to upsell them in terms of more data, more users, and throwing analytics and data processing at them to grow the scale of our offering, and it makes us more deeply embedded in their workflow. Someone asked me about the Woolpert partnership. I think that individual might have found that from some research they'd done. Woolpert are a partner. They're not paying us a lot of money at the moment. They threaten to, and certainly to the extent that they do become a material customer, we'll certainly make that announcement. Woolpert are one of the big mapping companies in the US. There are 4 or 5 big mapping companies in the US. Nearmap isn't one of them, and I'll get to Nearmap in a minute because that's another question that gets asked. Dewberry is our biggest US mapping customer, and Dewberry is our partner on the Florida Statewide project at this point. So the probably a good time to turn to the Nearmap question, because I get asked that a lot. So the first point to make is that Nearmap are pixels and we are points. So pixels are imagery, points is 3D, it's laser scanning and LiDAR. That said, you can turn pixels into points, photos into 3D, and Nearmap's starting to do some of that stuff. But at a higher order, from a higher order comparison, Nearmap is a mapping company. They fly planes at this point in this region and North America, on their balance sheet or through lease arrangements, and they spend enormous sums of money procuring fantastic quality imagery, both top down, which is called ortho, and side views, which are called obliques, and it's the side view photos, the oblique photos that you can stitch together mathematically and produce a 3D mesh or even a point cloud. Now, the sorts of use cases for top-down imagery and oblique imagery and meshes tend to be very different to the use case for true 3D data that's generated from laser scanners and LiDAR platforms. That said, many of our customers are Pointerra customers and Nearmap customers. So if you're managing an asset or you're involved in a town planning or surveying or engineering and architect practice, often you'll have a need to access imagery other than Google Earth. And you'll also have a need to use 3D data. So important point there, we don't capture. So Nearmap captures, we don't capture. We help people solve the problems associated with capturing data. And we designed our business from when we conceived it, and we conceived it with myself and some of the dev guys and a couple of the Nearmap founders to make it a very light business in terms of its cost structure, and not get involved in that capture space, which involves tons of capex and is often disrupted by new technology entrants. So we expect as we scale up, we're going to start to see revenue run well ahead of costs, and we think as we scale into the millions and fives and tens in recurring revenue, that that we'll have an incredibly profitable business, and when normal capital markets resume in terms of normal valuations, and not that high growth tech companies you could ever describe them as having normal valuations, but it's been, this week I watched APT go from whatever it was down to $8, and I think it's trading at 23 today. So there is still, there are still some valuation metrics applied to high growth software as a service businesses, where the cost base is known, and the bet is that the company will be successful in scaling. And that's our challenge. It has been for the last year or two. We're incrementally growing the tools, the sophistication into different verticals of what we do, particularly in the analytics side, but the challenges remain the same, and that's sales execution.
Ian, have you got a gut feel for when you think the business might turn cash flow positive? I mean, do you think it'll be in the next 12 months, 24 months?
Look, the ACV would tell you, if there was no disconnect between ACV and revenue and cash, we're there. We're a US dollar, where possible, we are a US dollar business. So when we quote people, it's in US dollars. And the principal reason for that is it's a global business. Our principal variable cost base, which is the money we spend with Amazon or AWS, the cloud platform, that's a US dollar cost. So we obviously the poor old Aussie peso has copped a bit of a hammering lately, and particularly for our US guys who obviously that's their native currency, we're going to start to see some benefit of that. In Australia, we've got depending on the customer, some of them pay in US dollars or do spot translations, and others. If they're prepared to pay in advance, we'll cut them a deal. But so we see that with the current ACV and what we expect to come in the next few quarters, we're pretty much there, Paul. And like I said, it'll take alignment of ACV revenue as recorded through the accounting standards, and cash for people to see that. But we've had a couple of board meetings since COVID started to break, and obviously more recently as we've all become dislocated, and we've always run this as a very lean machine. That said, we're not going to sort of retreat in and put the business on hold. This is exactly the time when we need to, when the sales guys, we had a call earlier, Randy in Jamie in the US, and myself and Kevin down in Melbourne, and Dave Lowe, who joins us from AAM on Monday. Today's actually his last day at AAM, so he joins us Monday up in Brisbane. So we speak formally, we have sales calls twice a week, one at the start of the week, one at the end of the week, but we're pretty much speaking daily at either end of the day, and we're using this time to make as many calls as we can to existing prospects to remind them that we're here, to let them know that it's really easy to get on board, that they've got a trial account if they maybe hadn't looked at it for a little while. So we're pretty confident about where we sit in what is still, at a macro level, a very uncertain world. I think so someone asked me, there was a question about why should I be a shareholder, and why what makes this company so good to be a shareholder in. So well, look, if you paid 5 or 6 or 7 cents last year and you were interested in your short-term mark to market, then you'd justifiably be a bit upset with the current valuation. What I'd say is that if you're investing to trade, then that's obviously disappointing. If you're investing for the future, and as a growth stock that wasn't going to happen in a quarter or a 6-month period, then our business every quarter is stronger than it was the previous quarter in terms of more advanced analytics, deeper product insight into different verticals and sectors, and a growing list of very sticky customers who are paying us more and for more data, paying us more for more users, and paying us more for deeper insight through different analytics that we might do for them. So if you're interested in a high growth in a high growth software as a service business that's US dollar denominated, is operating in a global market with few competitors, then I think at a $13 or $14 million market cap, I'd like to think we're not a good bet. I'd like to think that we're a sound investment. As ever, in what we've learned is that this stuff takes frustratingly longer than we'd like it to, and I'm the least patient person in the business. So what we do know though is that we have a very compelling solution, and we have very few competitors. And once people get on board our platform, they love it because we make their life easier. And if you're not solving problems and making someone's life easier, then the value proposition it gets hard. And certainly, we've not seen from the smallest customer to the biggest customer, we've not had calls, hey, can we park our account? Hey, can we, this is really tough at the moment, can we scale back? So we're really delighted with what we've seen so far. That's not to say it won't come out, that we won't have a business or a customer ring up and say, hey, I've had to pause my business for a few weeks or a few months, and then we'll deal with that when that presents. But I can tell you that today, so far, that we've not experienced that. So I think I've covered all the questions. I've covered all the sort of an overview of the last enterprise sales update and the COVID announcement from this week. Obviously, the quarter ends on Monday. We'll be putting out our 4C. We usually do it towards the end of April. We might be able to bring that forward given these uncertain times, and we'll endeavour to do that if we can and if it's appropriate. The reason why we often wait till the very end of the 30-day period post the quarter is not, obviously we can't change cash flow, but we can certainly change ACV. And we often find that we spend the last month of the quarter running around collecting cash, and the first month of the next quarter trying to onboard customers. And so by the time we get around to reporting ACV, that 30-day period into the next quarter becomes quite important. So I'd like to, I'll probably finish there, Paul. I'd like to thank everyone for their attendance and for listening. My phone's always on. You guys have got my email address. Some of you reach out to me as often as daily. I've got a fund manager who's particularly interested in speaking to me on an almost daily basis, and he and his fund have been great supporters to us over the journey. And we'll endeavour to do one of these in a couple of weeks' time. I think it's appropriate in these circumstances, but also this is a tool that we use every day. So we'll endeavour to give you another.
Likewise, Ian, if anyone on the call has any questions, they are welcome to ring me at Canary Capital.
Sure.
My mobile number is would be on our website or our contact details.
It's also at the bottom of the announcements, Paul. So yeah, and I will post once I figure out how to get this recording into the cloud. There'll be a link to this recording on our website, so people will be able to access us there. So once again, stay safe, everyone. Best wishes to your family, your immediate family, your friends, and your colleagues. And let's hope that in a few weeks' time we've got better macro news to talk about in terms of our day-to-day lives. Thanks once again.
And Ian,
yes,
to you, thanks for your time, and we'll keep up the good work on growing the business. So the market will give you the recognition eventually that it deserves.
Look forward to it. Thanks, Paul. Bye, everyone.
Bye.